Okay. All right. So so let's move on. All right. So I think I've run through the background, the environment of TradingView. Please, if you don't have this account yet, go and open TradingView account. It is where all the magic happens. All right. Okay. So now I can move on. Now, what you have here is all the tokens that you can trade. There is no rule to any token that you can trade or that you cannot trade. Every token is available for you to trade. It's all about making the money. And so any of these tokens is an opportunity for you to make money, to double your dollar, to triple your dollar, or quadruple it. So you as a trader, what you shouldn't do is discriminate against any token because you are a trader. You are not an investor. An investor would discriminate against a particular token and show love for another token. That's an investor. But you as a trader, that is outside of your scope. Every token is your friend, and every token is your enemy at the same time. The only thing you're concerned about is to make money. The only thing you're concerned about is to flip that dollar. All right. Apart from that, there is nothing more. So that's a point there. So I haven't said that, and also that is the reason why you can see this is over 100 tokens on my page there, and I trade each and every of this token anytime I feel like. Anytime I see the one that has an opportunity for me to double my dollar, I go in there. All right, it doesn't matter as long as I can pull up the charts here, as long as the chart can be visible for me in order to tell me the direction of the market, I am fine with it. All right, so that's basically it. All right, so the next thing I want to show us is all the patterns that we've been through before, theoretically in the last class. I want us to be able to identify them when you see them on the live chart. So that's the next thing I'm going to do now, identifying the candle patterns, the ones that we've been through or the ones that we have talked about in the last class. All right, so currently I'm on a token called C98. All right. It can be any token. Every token has all the candle bars. Every token chart has all the patterns. Every token chart has all the various kind of candlesticks. So it means that any token that I choose here, I can find these tokens there. Any one that I choose, I can find all the patterns on any of these charts. It doesn't matter. All right. So having said that, now the first thing that I want to take us through, show us, is Bearish and Engulfing Bar. That was the first pattern we checked out in the last theoretical class. Bearish and Engulfing pattern, which I said consists of two candles, as you can see, a green candle and a red candle. And one important thing that we'll say is that Bearish and Engulfing Bar occurs at the end of an uptrend. And what this means is that the buyers, people who want the price of a token to go up, or the bulls as we call them, they are being engulfed by the other category of people who wants the price of a token to go down. And those ones are referred to as the bears or sellers. So you know your normal bull animal, the bull animal, and you know the normal bear animal. All right. So the bear animal represents sellers. The bull animal represents buyers. And so we usually refer to this category of people with the name of these animals. All right. So that is why when they say the market is bullish, that word bullish comes from bull, you know, and then the adverb form is bullish. And so it means that the price of a token is going up, is rising, or is appreciating. And when they say the market is bearish, that word bearish comes from the animal word bear, B-E-A-R. And the adverbial form is basically bearish anyways, or the adjectival form, whatever you want to call it. All right, so that's it. So the bearish engulfing bar means that sellers are taking over the market from the buyers. So now let's identify the bearish engulfing bar. If you look at it closely, it consists of two candles, a green candle and a red candle. The red candle is bigger than the green candle, and you usually find it most times at the end of an uptrend. All right, so let me show you what an uptrend is. I'm just going to draw it. So rather than go through the theoretical definition of what an uptrend is, I'm just going to show you. Some things are better learned in practical, especially when it comes to trading. All right, such that the things that you see me do here on this live video, you can as well go to your own charts and do the same thing. That becomes it's more easier like that. All right, so this is an example of an uptrend. This is an uptrend. This is an uptrend. This is an uptrend. All right. Let me go back here. All right, so let me go again. Come on. This is an uptrend. This is an uptrend. All right, that is an uptrend. So an uptrend basically means when the price of a token or when the price action is on the rise upwards. Now, on the other hand, the opposite of uptrend is downtrend. And so let me show you what a downtrend looks like. This is a downtrend. This is a downtrend. This is a downtrend. All right. I hope you're following. This is a downtrend. This is a downtrend right here. So when I say uptrend or when we say downtrend and uptrend, at least now you understand, or you can say, or you can tell what a downtrend or what an uptrend means. All right. Because this is one of the tools, or this is one of the secrets that you need to know as a pro trader. You need to be able to know your downtrend and your uptrend. Your downtrend or your uptrend is what tells you what is the current shape of the market, or it tells you what is the current direction of the market. Is the market in an upward movement? Is the market appreciating, or is the market going down? Is the market bullish, or is the market bearish? It is your trend that gives you that information. All right. So when the price of a token is going up, we say the market is bullish. When the price of a token is falling in a downtrend like this, we say the market, or we say that token is bearish. All right. Any question? All right. If there are no questions, let me move on. Okay. So now let's look for a bearish engulfing pattern. We said that bearish engulfing pattern contains two candles, and it usually happens, or it usually occurs at the end of an uptrend. And what it means is that the sellers are taking over. All right, so let's go here. Hold on. So let me go here, for example, and let me show you something. I'll go on the 4-hour time frame. All right. So on this token, for example, let me expand this. I have drawn several trends. Okay, I've been able to identify the downtrend and the uptrend with those lines there, which tells me at a point in time when the market was bullish, and also at a point in time when the market was bearish. All right. Then I'm going to go to another token, and this time it's the BTTC token. So when I come here, you can see a chart where I have been able to pinpoint and identify some of my patterns. I hope you can see my screen, please. So here, I've been able to identify some of my patterns. Now, this is a bearish engulfing pattern right here. This is one, this is another one. This is one here, and this is another one here. This is an example of a bearish engulfing pattern, which we say you will usually find it at the top of an uptrend. It consists of two candles, a green candle and a red candle. The red candle sometimes is almost twice the size of the green candle. And the moment you see a bearish engulfing pattern, it should tell you something as a trader. And the only thing it should tell you is that sellers are taking over the market. So if you are a buyer, you need to take your profit and exit the market. As you can see here, for example, you can see that the moment we were previously in an uptrend, the moment this bearish engulfing pattern appears, what happens? The market began to go down. The direction of the market changed from an uptrend to a downtrend. And that is exactly what the bearish engulfing pattern tells you. All right? Now, the next thing is a doji candle. A doji candle is a single candle. And a doji candle is a special candle that 90% of the time it's accurate. Not 100%, but 90% of the time it is accurate. All right? The doji candle is what looks like the Catholic cross, like the four cardinal points. All right, that's the doji candle, and the doji candle usually stands out among other candles. Basically, you're not gonna find it. It doesn't have the same shape as most other candles. It usually stands out, and it looks like a cross. And the doji candle means that there is indecision between buyers and sellers. All right. So when you find a doji candle at the top of an uptrend, what it basically tells you is that the market is about to reverse, just like we see in this example here now. You can see we were in an uptrend here. The moment a doji candle showed up here, the market went in a reversed, the market reversed in an opposite direction, and the price action began to fall. That is a doji candle for you, and that is the interpretation behind a doji candle. The same way, you can see another doji candle down here as well. This is another doji candle here. This is another one here too. We were in a downtrend right here. This was a downtrend. And the moment this doji candle showed up, the market reversed and we went and moved in an uptrend. And that is a practical scenario, a practical picture of the importance of the interpretation or the meaning of the doji candle. The next one, I think, which is also the other pattern that we talked about, is the Gravestone Doji. The Gravestone Doji has a long upper tail and it has a flat bottom, as you can see here. I hope you can see it clearly. This is it right here. This right here. That's your Gravestone. That's a Gravestone Doji candle. And we say that a Gravestone Doji candle is a bullish candle, which you will usually find at the top of an uptrend. And the moment you see it, it means there is highly going to be a reversal. So you as a buyer or as a bull, the moment you see a Gravestone Doji show up, you need to make a decision whether you want to take profits, your entire profit, or you want to take some of your profits. Whether you want to sell off all your token or you want to maintain small position while you let go of some of your position. All right. And you can see that we were previously in an uptrend. We are coming in an uptrend here. And the moment the Gravestone Doji showed up, the market went in the opposite direction. And that we saw a reversal right there. Another meaning or another takeaway from a Gravestone Doji is that it tells you that at this area, let me take that off. It tells you that at this area of this long tail, there was a high selling pressure, number one. Number two, it is mostly an area of resistance. Okay, so it means two things. Another meaning for a Gravestone Doji is two things. It indicates there was a high selling pressure. So sellers, they attacked the price at that level. All right, and they succeeded, or they are likely going to succeed in pushing down the price, which in this case, they succeeded. And the other meaning is that this particular area where we are, is an area of resistance. All right, we will talk about resistance and support very soon. If not in this class, then it's going to be in another class. But let's see as we move on. Okay, so as you can see, this is an area of resistance, and this is just about the same area where the Gravestone Doji showed up. Okay, so it means there is a high selling pressure here. It means sellers, they were waiting at this price level in order for them to dispose some of the things they have. The ones that are holding the tokens, they want to sell at this price. The ones that want to buy contracts, they want to buy at this contract and push down the price of that token in order for them to make money. All right. Okay, so any question? Yeah.
Yeah, hello. I've been trying to follow. I just have a question. How do you make money when the price is going down? I thought you had to make money when the price is going up.
Beautiful question. So, in past class, I have mentioned that there are two ways, or there are two types of sellers, and there are two types of buyers. The two types of sellers, number one type, are the ones who are holding on to a token. So they bought the token, they possess the token, they have it in their wallet, and they have a particular price which is higher above their buy price or their purchase price, where they are willing to sell that token. All right, so those type of buyers, maybe they buy a token at $5 and they are waiting to sell once the price reaches $10. All right, that is one type of seller. The other type of seller, those ones, they are not buying an actual token. What they are buying is what we call perpetual contract. All right, let me put my text up here. Perpetual contract, right here. Let me make that bold. All right, so perpetual contract. The other type of sellers, like I said, or the second type of sellers, they don't buy an actual token like the first guys. What they buy is what we call a contract, perpetual contract. And what that contract means is that, anyway, we know what contract means in a traditional world, yeah. It's just like a paper agreement, all right, where you are saying that, okay, this is what is going to happen, or this is what I have decided to do, and this is what we're going to do based on this, and we both agree. All right, and then after that, if what we have decided to work with, if it happens, then each side will fulfill their side of the bargain. So let me bring that home. For example, you are entering into a contract with the market makers, with the people we call market makers. Let me write that in a text as well. Market makers. So I'm going to explain as in a layman's term, as simple as possible. Market makers. Part of the people that you can refer to as market makers are the owners of the exchange sites, you know, like Binance, like Bybit, like Bitrex, like BitMEX, like Coinbase, and every other exchange site out there. They are part of the market makers. And some of the other market makers also are those ones who provide some sort of liquidity. All right. So these people are sometimes referred to as market makers. But when you go on an exchange site to enter into a perpetual contract, who you are entering that contract with is that exchange site. So if I have an account on Bybit and I want to trade a contract, I am entering an agreement with Bybit, and the content of that agreement or of that contract, or the agreement in that contract, is basically that I am saying, me, Krypton Kid, I am saying that the price of this token is going to fall. All right. And Bybit says, okay, that's fine. This is your terms. Okay, that's fine. And the conditions are, once the price falls, as I have predicted it, the condition is you will pay me certain percentage. That is one of the conditions. You will pay me certain money, all right, as profit. That is one of the conditions. The other condition is that you are going to give me an increase on the power of my money. All right. So when you give me an increase on the power of my money and the price goes down, the price of the token falls as I have predicted, I will take my profits and you also will take your commission. So I will take my profits. Bybit will also take their commission from that perpetual contract trade. All right. So that is what perpetual contract is about. Now, that is my own side of the contract. The side of Bybit in that contract, remember, contract is an agreement between two parties, two or more parties. The other side of Bybit is that Bybit says that, okay, if the price of the token falls as you have claimed, we will pay you certain profit from the market. They are not paying that money from their pocket. They are paying it from the market. And I will tell you why later. I will pay you certain profit from the market. We will give you raise to power of your money. Anyone that depends on your option. Maybe raise to power 10, raise to power 4, raise to power 2, raise to power 3, or even 100. And that is where you have the term X2, X5, X20, 20X, 5X, 50X, 100X. All right? So we will also give you that, no problem. However, the condition is the price has to fall as you have claimed. But if the price does not fall as you have claimed, if the price rather goes up, then our condition is that we are going to take either some of your money or all of your money. And that will amount to loss on your side. And you say, okay, that's fine. Let's go there. I'm all right with it. No problem. And then you enter into that contract. So like I said, this second type of seller They are not buying, they are not selling an actual token. What they are selling is contracts, which we refer to as perpetual contracts. And I've just explained in layman terms what that perpetual contract is like, or what it means. So these are the people that profit when the price of a token fall. All right.
Yeah,
So
yeah, that really explains it. Yeah, thank you. Can you
okay.
also
Okay.
decide whether have a contract that says if the price goes up?
Oh, of course. So that will be the next one. So all right. So the other in past class also, I mentioned that there are two types of buyers. The first category of buyers are the ones who buy a token because it is cheap. So today now, if Bitcoin, I'm not saying it will happen, guys, but if Bitcoin goes to $10,000, and I'm telling you, there will be a lot of people who will go and break the bank in order to acquire some Bitcoin because it is now cheap and they also want to own some. They also want to own some. All right. That is one type of buyer. And the other type of buyer are the ones who are not buying an actual Bitcoin token. No, they are not buying that token to store in their wallet or on their exchange account. No. What they are rather doing is they are entering into a contract with the market maker to say that I am sure that the price of Bitcoin is going to rise up in the next 4 hours, in the next 1 hour, in the next 5 minutes. It depends on the time frame. All right. So, and then this is the price that, or this is the higher price that Bitcoin will get to. And so the conditions, the agreement remains the same. So with the exchange, they will say, okay, fine. So my own agreement on my own terms is this price will go up, it will go to certain price. And once you get there, my conditions are you will pay me profit and you will also give me my money raised to power 10 or raised to power 20. And after I have that, after what I predicted has happened, I will take my profit. I will also give you your share. And the exchange side too will say, okay, that's fine. This is also our own terms and our conditions. And then you enter into the perpetual contracts. And so when the price of Bitcoin rises, these people are making money. Remember, they are not holding any BTC token. They don't need to hold it. They are only entering into what you call a perpetual contract. All right, so that's about it. So even though in the past I've mentioned this thing, I really didn't explain as detailed as this. So at least I'm glad I'm able to do that in this session, which is fine. All right. So if
Thank you
that's
very much.
all,
It's now
all right,
much
all
clearer.
right, beautiful. All right, you're welcome. All right. So please, if anyone else has any other question, you can just interrupt me and speak. It's fine. So in the meantime, I will just move on. Okay. So let's continue with the rest of the candle patterns. We've seen Gravestone Doji, we've seen the normal Doji, we've seen Bearish and Golfing pattern. And the other pattern we talked about is the Morning Star pattern. All right. Let me switch over here and let me come right here. This is Morning Star. So Morning Star pattern we say consists of 3 candles. There is a smaller middle bearish candle. There is one bullish green candle and there is another bearish red candle. So Morningstar candle shows us how buyers took control of the market from sellers. When it occurs at the bottom of a downtrend, near a support level, it is interpreted as a powerful trend reversal signal. And that is to say that Morningstar pattern is a bullish pattern. All right. So once again, by now you should know that red candles are called bearish candle. Green candles are called bullish candles. All right. So this is a morning star pattern right here. As you can see, it has a red candle. It has a smaller middle candle, red candle in the middle, and followed by the third candle, which is usually, always green, which is always a bullish candle. So this is an example of a bullish pattern right there. Sorry, of a bullish morning star pattern. And you can see that we're actually in a downtrend. We're coming down in a downtrend previously. This token was falling. The price of this token was falling. And the moment the Morningstar pattern showed up, there was a spectacular trend reversal. So the markets changed direction and began to trend upwards. All right, so that is it there, evidently, as practical as possible. And so you, as a buyer that you want to buy a token at a cheap price, this is where you should buy. You, as a second type of buyer that you want to enter into a perpetual contract, this is where you should enter into that contract at this price level. All right, because you have seen the Morningstar pattern visibly here. It has completely showed up, and that tells you one thing: the market is about to start going up. And so this is the time for you to buy. Either buy an actual token or buy a contract. All right. The next thing is, for you as a seller, you know that before this happens, you know that this is where you should be taking your profits. Okay? You that you have a token previously and you want to sell and take profit, this is where you should sell. The moment you see this doji, and again, you know that doji also means a previous trend is about to reverse. This is where you should sell and take profit. And so, however, for the other type of seller, this is where they enter into an agreement that the price of this token is going to fall. And this is it. The moment the contract sellers see a doji after this trend right here, after this uptrend right here, the moment that contract seller see a doji, the seller be like, oh, now I have my goal. Now I can enter. I can enter into a what? A selling contract. And he says, all right, Bybit, I want to sell a contract of this token. I am predicting that this token is going to fall in price to certain level, certain price level. Okay, and like that. And that's about it. All right, so that's it in practical terms, really. All right. And the last one is Dragonfly Doji right here. So this is a Dragonfly Doji. Dragonfly Doji is like the twin brother of Gravestone Doji, if you have noticed. The Dragonfly Doji is like when you flip the Gravestone Doji the other side. Or Gravestone Doji is like when you flip the Dragonfly Doji, when you flip it to the other side, as you can see right there. All right, so the Dragonfly Doji is a bullish pattern, or is a bullish candle. And what that means is that it is a candle that signifies that while there was a previous downtrend, the market is about to trend up. All right, so that's it. Any question at this stage? If you have any question at this stage, let me hear it. If you have comments, let me have it. So far, I've been able to show us how to draw trend lines, downtrend, how to identify your trends, downtrend, uptrend. Now, there are three types of trends. Let me just say that right now. There is downtrend, there is uptrend, and there is sideways. Okay? Let me just write that here. There are three types of directions. Let me just say direction. Let me not say trend. Downtrend, uptrend, and sideways movement. Okay, so these are the three directions of movement, basically. So these are the three types of movement: downtrend, uptrend, and sideways movement. So tokens, or the price of tokens, moves in either of this direction. All right. For example, this is you've seen downtrend, you've seen uptrend. This right here is sideways, as you can see. So the market has been moving in sideways. It hasn't gone up, neither has it pushed down. So I think that's the point I needed to get out there. All right. Any questions, guys? Okay. Yeah.
Hello.
Yes.
All
Yes.
right. Okay, I actually have some questions, but I mean, I think I should just ask one. So later, maybe when going along the way, I will now ask the rest.
Okay.
Okay. So my question is that, I mean, one, I want to ask now, all the candles, do they depend on the movement of BTC? So let me just ask with that, and I mean, I will stop at that. Do they depend on the movement of BTC, even if you analyze or you understand the movement of the candle? Thank you. Let me just stop at that.
Okay. Beautiful question. Now, I want to say that there are certain natural phenomena which we cannot really write off. It is applicable to both even our world. It's applicable to the human world as well, and it's also applicable in cryptocurrency. And I will explain. There are three major things that I've been able to identify. For me, anyways. Someone else might have more, but for me, these are the three major ones. And I don't know if it was in this class that I've touched it before, or in another class of the other categories or the other students. Okay, so we know that the fact that some countries today, so let's just look at the human world. Some countries today, you cannot write off the fact that they are more advanced than some countries. We also cannot write off the fact that some countries are more advanced, some continents are more advanced than some other continents in terms of technology, in terms of civilization. And so this made it in such a way that some countries today, they are like what you call forerunner in terms of the world economy, in terms of the world technology advancement, in terms of the world financial activities. And in fact, that has made it possible in such a way that some of these countries have these other less advanced countries in a way symbiotically dependent on them, or in a symbiotic relationship. All right. So what that means is that, for example, you as a Nigerian, you remember that when recession, or most of us in Africa, most of the African countries, if you can recollect, when there was global recession, I think that was in 2019. All right. You know that, you can remember that when that economic recession hit the advanced world, or the West, let me use the word, the West, you will remember that African countries, they were affected indirectly. All right? And that is because of that symbiotic relationship. That is because of the fact that these people have an influential edge on the rest of, or on most of the African countries, such that when they sneeze or they cough, the African countries must feel it. They will feel the impact. You understand? If tomorrow something happens to China and something hits their entire manufacturing, whatever, what that means is that for countries that depend largely on supplies from China, they are going to suffer as well. For countries that are not a manufacturing countries on their own, they are going to suffer. And that is a symbiotic relationship. And that is also this natural order of things as far as countries is concerned. Now, this kind of relationship happens between BTC and the rest of these other tokens, which we refer to as altcoins. There is that symbiotic relationship. There is that influential edge that BTC has or currently maintains and possesses over these other altcoins. And that is not going to go away anytime soon. All right? So what that means is that anytime something affects BTC, when BTC falls, naturally, these other altcoins, they must also fall. When BTC rises, or when the price of BTC rises, these other altcoins, they must also gain some numbers. All right, that is number one. Is that clear? If that is clear, I'll move on to the next one.
Very clear, very clear. Thank you so much.
Beautiful. So the next one is that because today in the market or in the trading of the market, there are tokens. Many of these tokens appeared with BTC. Many of these tokens appeared with BTC. You can see, hold on, let me go to BNB, for example. You can see BNB BTC. You're also going to see Ethereum BTC and so many of them like that. Because these tokens are paired with BTC for trading. All right, so pair is like when you have, just like what I've just showed you now, you have BTC USDT, you have BNB USDT, you have TRX USDT, you have what other one? Ethereum ETH USDT, and some other kinds of. That is an example of pairing. USDT is a token. BNB is also a token, or as any other token as well. So when you now have something like BNB USDT, that is called pairing. All right, so that means you can trade. You can use a token to trade another token. So you can have USDT and trade BNB, or you can have BNB and use it in exchange for USDT. So that's what we call the pair. All right, pairing. So because BTC is also paired with some of these altcoins, it means that when BTC is falling, just a minute. When BTC is falling, or let me say, when traders, pro traders like you, when they have charted or when they have analyzed that BTC is going to fall at a certain price level, all right, what do? And they understand the fact that whatever happens to BTC, so based on my first point, whatever happens to BTC also impacts these other altcoins. So what do? They will go and set what you call, or what I call, stop loss. They will set, this is it. Maybe you must have seen it being abbreviated a lot of times, SL. That is stop loss. They will go and set stop loss on this on their tokens. So for example, if I'm a trader and I have BNB, maybe BNB paired BTC token, I'm trading BNB/BTC, and I check BTC, it is my responsibility to always check BTC, because whatever happens to BTC affects my BNB. Remember, the pair that I'm trading, or the token pair which I'm trading, is BNB BTC. So I need to always chart BTC, or to always look at or be aware of the BTC movement, all right, as against my BNB. All right. So now, let's say now I went ahead to check the chart of BTC, and from what I'm seeing, I can see that BTC is about to hit a resistance, and once it hits that resistance, the price will start falling, and I know that, oh, that will affect my BNB price based on my first point. What will I do? I will go into my Bybit account and I will go and set stop loss for my BNB to say that once the price of BNB begins to fall at this level, at this price level, please, you Bybit, help me convert my money to USDT. Help me convert my money to stable coin. All right. Now, imagine that there are now about 500 traders who have done the same thing that I have just done. What will happen? What will happen is that there will be more supply of BNB in the market. And if you understand the law of demand, can you hear me, guys?
No, we couldn't hear you for a brief moment.
Okay. I noticed, because I think my network sort of was flipping. Okay, so just a moment. So I was saying that now imagine that there are about 500 other traders like me who have done the same thing that I have just done, just because they also saw that price of BTC might start falling any moment from now. And so what happens is that there will be 500 traders, at least 500 traders, who are willing to part ways with the BNB token they were holding, or with the BNB contract that they were holding. That, please, convert, take off this BNB token, sell it off, or take off this contract, close it, and give me back my USDT. You understand? And what happens at that point is that there will now be more supply of BNB in the market at that point in time. And you understand the law of demand and supply. When there is more supply of a commodity, what happens to price? It falls. When there is high demand of a commodity in the market, what happens to price? It rises, or it appreciates. And so that is the second determinant, or that is the second case where, or why, or that's the second explanation why you find out that when BTC, or the answer to the question that why does the prices of tokens fall anytime the BTC, why, that kind of a thing. Yeah. So that's it. So I'm just going to stick to those two for now, which I think it's that has done enough justice to explain as to why when BTC falls, other tokens fall as well. All right. Any other question before I move ahead? Okay.
Yeah, I have a question. I'm
Yeah, go
trying
on.
to understand why we do the pairing. Like, does it come with any advantage?
Okay, no. You are not the one who does the pairing. It's the market makers that do it. I'm not sure I know why they do it anyways, but I guess it's just to make options available for people. Okay, so I think this is the reason. Now that I've said options, I think this is the reason. For me, for example, I know there was a time I said something in the community. You know, I told people that while I was part of the people that had Bitcoin when Bitcoin was still nothing, I didn't realize I was blind to the future opportunity or the future significance of Bitcoin. So I sort of lost it. All right. So I'm now unlucky in the way that I don't have as much Bitcoin as I would love to keep. And so what I do is there is a certain token that I trade against BTC. And so what I do is, because I have identified that this particular token does well, I mean, like, it performs well as far as the pairing is concerned. So I use this particular token paired with BTC to acquire more BTC as much as I want. And so I told them that that is how high I've been able to acquire more BTC. So I don't take money to go and buy BTC because it's useless. I mean, BTC is what? 50 something thousand? $30,000? 40 something $1,000? Come on. I'm not going to be able to bring out $50 or $30,000 and buy one BTC right now. But then there's a way for me to do that. And that's what I'm doing. So now imagine that that option is not available for me as a trader. What happens? I will be at a disadvantage. I won't be able to achieve one of my goals as a trader. You understand? So I think that will explain why these pairing are available. Just to, so different customers, different needs. You need to be able to satisfy, or you need to be able to account or envisage the various needs or the various options that your customers would need. And this is what these exchange sites or these market makers, this is what they've done, in such that they've been able to make several options available for people. All right. All right. So, yeah.
Yeah. Oh, yeah. That helps. But
Okay.
to understand it further, does it mean like when you are trading a pair, you are converting from one coin to the other coin,
Oh,
or
yes,
does it mean
that
you
is
are
what it
trading the
means.
two together? Okay.
No, that's what it means. So it means that so for example, if you are trading hold on, let me come here. This is BTC, let's say BTC USDT. This is BTC USDT, for example. All right. So this is a pair. So it means that what I'm doing is I have two choices, or two options rather. If I have USDT, I can use USDT to acquire more BTC. All right. The other option is if I have BTC, I can use BTC to acquire more USDT. All right. So what that means is that if I have a BTC now, one BTC that is worth 30,000 USDT. So if I have one BTC now, and when you convert that BTC to USDT, it is 30,000. So now, if in the next 2 days, BTC price appreciates and it goes to 50,000, automatically what that means is that I now have 20,000 extra in terms of my USDT value. All right. So it means now, if I decided to sell my BTC, I have been able to acquire more USDT. And if you flip it the other side as well, the same concept applies. If I have a USDT 30,000 now, I'm able to only acquire one BTC. By the time BTC goes to maybe 60,000, in 2 days to come, for example, all right? What that means is that I have now been able to have 60,000 USDT worth of BTC. So if I decided to take my USDT at that point in time, all right, and go withdraw it and go keep it, it means now I have $60,000 worth of BTC in my wallet. All right, and of course, that is assuming that BTC does not fall below 60,000 again, anyways, which is normally not the case. All right, so that's about it really. So it means that I have a token which I want to use and acquire the other token, or I have the other token which I can also use to acquire these other tokens. So that's what it is. Is that clear? Does that make sense?
Yeah, it makes sense.
All right, beautiful. Okay, so next question. If there are no questions, then I can move on. Okay, Morningstar candle. We've looked at Morningstar candle, and excuse me. And these are the other type of patterns that we have. Now, these are not all the available candle patterns in the market. Let me put it like that. There are several of them, but these are more like the common ones. And because we won't really be able to touch on all of them, so I just decided to work with a few common ones really. All right, so we have the Harami pattern, we have the shooting star, you have the evening star, you have the hammer, pin bar, you have the tweezers top and tweezers bottom. The next class is gonna come up on next Sunday, unfailingly. So please, I want you guys to go and have a look, do some research on these patterns, and let's come next week and play around with some of them on the charts, on the live charts. Let's identify them and let's see and let's have an interactive discussion on what they do, okay, or what they signify, or the meaning of how to interpret them and stuff like that. You understand?
Hello?
Yes, yes.
Please, before, we are ending today's class, right?
Not right now, but for the pattern, I want you guys to go and do research on these ones. Next week, we'll all look at, identify them on the charts and look at it and see their significance on the charts. So, but we're still moving on. We're not through yet.
Okay, thank you. I'm still with you. Thank you so much.
All right. Okay, so now the next one that I have not shown you is the bullish engulfing pattern. And the bullish engulfing pattern also consists of two candles, a green and a red candle. And when you hear bullish engulfing candle, it's just the opposite of bearish, which means you have a situation whereby a red candle comes first, followed by a green candle. And you will usually find it at the bottom of the downtrend, which signifies that, or which can be interpreted to mean that the market is about to start trending upwards. So it means that if now I want to look for a bullish engulfing pattern, I shouldn't be looking for it at the top of an uptrend. I should be looking for it at the bottom of a downtrend. Correct? Good. And here it is. This is one right here. This is a bullish engulfing pattern right here. This is another one here. Let's go look for some other places. This is another one here as well, even though this can also be, okay, I think this is a morning star. This passes as a morning star. Okay, this is it right here. This is a bullish engulfing pattern. Let me get the square. Right there. Let me get that. Let me get this. Bullish engulfing pattern. Right there. So 2 candles, a red one followed by a bullish candle, a bearish candle followed by a bullish candle. The body of the bullish candle is bigger than the body of the bearish candle, sometimes almost double the size of the red candle. That is one. Number 2 is you will usually find it at the bottom of the downtrend. This is a downtrend right here. And the moment it shows up, it can be interpreted to mean that the market is about to go in a reversal direction, or is in reverse. So it means the market is about to reverse. And in this case, we can see an uptrend. Immediately, the bullish engulfing candle pattern shows up. The direction of the token changed, of this token market or price changed and began to move upwards. Now, so for you as a trader, either a seller or a buyer, if you're a buyer, it means this is where you should be buying. You should buy here and wait for it to go up to appreciate, and then you can take your profit right here. If you are a contract buyer, it means this is where you should set your price entry. You should enter at this point. Your price entry should be here and wait here to take profit. If you are a seller, so if you are a seller, it means that you should have sold at this moment. You should have sold at this point right here. Okay? Because here, what you see is basically another pattern whereby you have the red candle showing up after a green candle, and then everything began to go in a downward direction. And just in the middle right there, you can see a doji showed up. Now, you will ask me that, but you said doji always signifies a reversal in trend. All right, guys, there is another meaning of doji, or there is a second interpretation of doji. When you see a doji in the middle of a trend, it signifies the continuation of that trend. All right. When you see a doji at the bottom or at the end of a downtrend or an uptrend, it signifies a reversal. But when you find a doji in the middle of a trend, it signifies continuation. And I think I can point a couple of them out here. You can see this is one, continuation. This is one, continuation. It showed up in the middle of that trend and the trend still continued. This is one, continuation, continuation. This is one, continuation. This is another continuation of that trend. All right, so this is where they show up in the middle of a trend, and in this case, it is a continuation of that trend. All right, so and it meant that while the sellers and buyers, while they were having their usual war, no one was able to win, or no one was able to take control, and so the trend has no other choice but to continue. All right, so this trend has no choice but rather to continue, and so that's one thing you should also have in mind, just in case you are looking at the chart and you're seeing Doji in this kind of position, and you're like, but this guy told us that when you see Doji, it means the market is about to reverse, blah blah blah. All right, so that's about it. All right. I think those are all the patterns, really. We've been able to identify them. I'm not sure there's any other one we haven't done yet. All right, so what next? What next? What next? Okay, so I've been able to show us a couple of things that we were not privy to in the last classes. I've been able to show us downtrend, uptrend. I've been able to show us how to draw your trend line. I'll be able to show us how to select your time frame. I've been able to show us the three directions of a token. I've been able to also show us the other type of trading that you have, which is perpetual contracts, and that is second to arbitrage. All right, arbitrage represents those ones who buys an actual token and they are waiting for the price to appreciate and sell. So they take advantage of the difference in price. All right, so now the next thing I want to do is, I've also been able to talk about the fact that as a trader, you need to choose at least 2 time frames that you will be working with. One bigger one and one smaller one. I've also been able to also tell us the time frames for the different categories of traders. All right, don't forget that, keep that in mind. Okay, so next thing I want to do is basically to show us Bybit. All right, so this is Bybit really. I've done a little bit of explanation on Bybit. Bybit is the most common used trading platform by pro traders because it offers some benefits that we couldn't find in Binance. So for example, one of those key advantages is that in Bybit, once I enter into a trade, I can decide to increase or decrease my leverage. And this is the leverage that I'm talking about here. When you look up here, you will see 10x, you can see leverage, long. So you can long a token and you can short a token. When you long a token, it means you are buying the contract. When you short a token, it means you are selling the contract for that token. All right, so for this, for example, you can see these are the 10 raised to power that I was talking about. So Bybit gives you an opportunity up to 100x. That is another advantage. Binance has limited people on the number of leverage they can use. I think it's been lowered down to maybe 50x now or 40x. Yeah, if my memory serves me right. I really can't clearly remember now because I no longer trade in Binance. I trade in Bybit now. What I do on Binance is basically arbitrage. All right. So Bybit gives you opportunity to use 100x leverage. So what that means is that your money is raised to power of 100. So if you have $10 and you want to use $10 to trade, part of the agreements in the contract that you can enter into, or that Bybit can allow you enter into, is that they will give you your $10 raised to power of 100, and you know what that means. So it means, in essence, you will now be trading with $1,000 as against the actual $10 that you have. All right. That's about it. The same way for short as well. You can also short 100x all the way from 1x, the minimum, all the way to 100x. So this is one advantage that Bybit has over Binance, and the other advantage was the one that I talked about before, which is once I enter into a trade, I can go back to that trade, that running trade, and change this leverage. In Binance, it is not possible. It is impossible in Binance. You can check and come and prove me wrong. I stand to be corrected. But the last time I checked, which was even one of the reasons why I had to move away from there anyways. Okay, so that's it. Those are the two key advantages that I found, and I can tell you for a fact that those were the two major things that won my heart over to Bybit, such that I now sort of distributed what I do with the two exchanges. So for Binance, I only do arbitrage. For Bybit, that is where I do my actual perpetual contract, either selling or buying. Okay, so I've been able to show us what leverage is in Bybit. I've been able to also show us what long means, short means. So when you hear people saying, I am long or I'm going long, you know what that means. When you hear people saying I'm shorting BTC, all right, you know what that means. All right. What else? Okay, so if you don't have an account on Bybit yet, I have my link in the pinned in the Telegram community. Please register with my link at no cost to you. And also when you register with that link, it's my affiliate link. It gives you opportunity to get a bonus, up to $100 bonus on your account or on your first deposit, or your first time on your first trade after you have deposited. Okay, that's the benefit of using my link, basically. All right. What else? What else do I want to talk about? Okay, so another thing is that every day Bybit is adding more and more tokens. What I want to say is that Bybit is not as old as Binance. So if Binance has been around for 50 years, Bybit has been around for 40 years. Okay, so it's like that. So it means that there are more tokens that are still being added to Bybit. But I can assure you, most of the common tokens you are likely going to be interested in trading, or they are likely going to find around, they are already available. All right. Okay, so what else? And another thing I want to show us briefly here, though we'll go, I sort of I created a poll in the Telegram community for people to vote and tell me if they want to know about staking. All right, so that poll has not ended. If you haven't participated, please check in the Telegram group and participate. Staking is a beautiful thing. It's more like what you can call passive investment, such that if you don't have the time to chart or do anything, rather than leave your money sitting in the bank and not yielding as much interest as you think or as you want or as you would like, you can convert your money into USDT, for example, and stake it. And then that will earn you more USDT in addition to the USDT that you have staked. That's one of the very beautiful benefits of staking. And it is something that a lot of us should do. So also, if you have some of your token that is just sitting there in your exchange wallet, your exchange account, and because you cannot sell them now because the price is not at the level where you want to sell it, then what you should do is stake that token such that the token continues to yield more until when the market becomes highly bullish, and then you can go on stake, and then you would have gathered more of that token compared to if you hadn't staked it. So that is a very key benefit of staking, which I think a lot of us should really engage in, right? It is very important, or it is something you really should know about. So if you have 1 million naira sitting somewhere in your account, my suggestion to you, you convert that to USDT, bring it to your Bybit account or your Binance account, stake it, and then you can earn more USDT in addition to that USDT. So it will just be as if it will be the same as you leaving the money in the bank, but this time you are gathering more US dollar interest on your money, unlike the currency of your country. So it depends on the part of the West Africa you're coming from anyways. Okay, so that's one thing. That's a very huge benefit of staking anyways. And, so after I've taken the collation of the poll, and then I will decide whether people want to know about staking or not, and then I can prepare another class where we look at what staking is, how you can stake, the benefits, what are the various categories of staking, and all kinds of things like that. All right, but for right now, I just wanted to give an overview, a brief detail of what staking is about and how it can be of benefit to you even while you are trading at the same time. So you really have to take best of both worlds, okay? You don't have to just sit on one path. It is important that you make money from both worlds. I have tokens I have staked already, actual tokens that I have staked, because I wanted them to yield more and more and more and more anyways. And the reason why some people are encouraged to stake is because some people on the other side are borrowing via what you call DeFi, okay, decentralized financing. So if there are no people staking, there will not be tokens to borrow by some other people. So that's the way it is. It's just like what happens in the bank. If there are no people saving, there won't be people who would, those who want loan will not be able to get it. In fact, those who want withdrawal are likely gonna be stranded. And that is why sometimes when you go to banks, maybe early in the morning, sometimes some of these banks, maybe quite early in the morning, they have higher withdrawal demands than deposits. And some of them will have to tell you to hold on. Yeah, I've been in those situations sometimes. The bank will tell you to hold on, that let them collect the deposits first. Let them take in money from the depositors first, and then they will take that, and after they've taken it and process it, they will move it to the withdrawal section, and then the money can now be available for the other parties, to withdraw. So it's the same thing that works in terms of crypto world. So that's it basically. All right, so I really wanted to touch on that just so we have an insight into that.
Yeah, I wanted to ask if the yield rate, the interest rate is stable, like it doesn't change when you start staking, and then maybe there can be some surprise later
on. Say that again. I didn't get that.
Yeah, the yield rate or the interest rate for the staking, does it fluctuate or it stays stable? Like the same amount they mentioned, it doesn't change. Yeah.
Okay. Let me go here. Let's go to. Let me see. Okay, I think I should go here. This one is simple enough for us to understand right now. So here, you can see you have, for Bybit, for example, you can see you have flexible staking and stable earnings. So these are like the two categories of markets that the Bybit has under staking. So the flexible, for example, means that there is possibility for you to, in terms of the time that you stake and unstake, number one. Number two is that there is more options on duration of staking. So There is 30 days, there is 60 days, there is 90 days, there is 14 days. So you have several options. That's flexible, right? Then the stable, on the other hand, the stable is like saying that in a way, there is really no, how will I say right now? There is really no what you call, what's the word? Rebase. Let me use that word. There is no such thing as rebase. So rebase is like the token companies or the contracts, okay, that is distributing the token has a way of balancing demand and supply, and such that that sort of changes the yield, or what you see here as APY. All right. So stable, on the other hand, means that the rebasing on that token will not affect your APY. So if they tell you that the APY on USDT right now, as you can see, is 3%, it is not going to change as far as USDT staking is concerned. You're going to get 3% on your stake. So rebasing does not affect this USDT, for example. There is no any such thing as, okay, we have to balance demand and supply, and then thereby we have to change the percentage of return that we give to people who have decided to save their token in our bank. All right, so that does not happen. But in terms of flexible, that happens. All right, as much as the duration is flexible, the availability is flexible, the staking and non-staking periods are flexible. Also, the APY also is flexible in such a way that rebasing has an impact sometimes later on as the yield begins to get what's the word now? Begins to get dry up. Let me put it like that. Okay. And another thing is that one thing you also need to understand is that it's not as if the owners of this token, they just have some, they are doing charity. No. When you do fundamental analysis on any token, for almost all the tokens, you will usually find what you call token allocation. And token allocation means that how we want to distribute our token supply. Okay, so we are giving 10% to investors. We're giving 50% to company owners. We're giving 30% to people that partake in initial offering. Okay, in the initial token offering, and then the remaining 20% will be distributed via other channels, and this staking is one of the channels. So it can be distributed via mining, it can be distributed via staking, it can be distributed via what's this other one right here? Dual asset mining. It can be distributed via dual asset mining. It can also be distributed via launch pool and some other ways like that, apparently. So this is why you have these things. Okay, so it's not as if these things are just there as sort of charity. No token company is doing charity, really. So all these tokens that you see here, what it basically means that it is part of an allocation that is available by the owners of this token to distribute to people via these different ways: staking, mining, dual mining, launch pool, and all kinds of other, smaller ways anyways, like that. So that is what it is. So I think that's about it in terms of whether the APY fluctuates or it doesn't fluctuate. So for flexible, you have to know which one you're going for. For flexible, it fluctuates. Though some does not really fluctuate as volatile like that anyway. So it might just be like maybe in the next 2 weeks, the yield may have decreased. You might notice that, okay, maybe it is no longer 200%, it's now 195%. All right, maybe in the next 1 month again, the yield may have decreased again by a certain percentage, based on the fact that the pocket of the token is getting dried up, and then they have to balance demand and supply, like that. So that's about it. But for stable ones, there's no such things. Okay, for example, USDT. Whatever you see there is what you will continue to earn. As far as that one is concerned, or as far as any of this stable staking is concerned. I hope I've been able to answer your question.
Yes, you have. But it looks like there's a lot to learn about it, all the details of
Oh
how
yes,
to.
oh yes. Oh yes, there is a lot, because crypto is wide and it's getting wider day by day, really. There's a
Yeah.
lot coming up every day, so yeah.
Okay.
So I think you guys should check out the staking. But like I said, I will check out the poll being conducted in the group. If I see a larger vote of people who wants to know about staking, then we'll prepare a separate tutorial for that, and show a practical example of how to do it, basically. All right. What next? Okay. All right. So I think I can take question and answer at this point, and then I think we can round up. I've really said a lot. We've been able to do a lot of justice so far, a lot of learning. Okay, so I guess while we are here, let me just let me see what BTC is like. Oh yeah, and while I'm checking out BTC, there's something I needed to point out to us, basically. All right, so I hope you all can still see my screen. So this is just going to be the last thing I'm going to talk about. I want to talk about what you call macro markets, or macro view and micro view. Macro and micro. Let me write that out. Macro and micro. Right here. So there is the macro view of the markets, of the token, and there is the micro view of the token. You as a trader, or you as someone who wants to trade cryptocurrency, or who wants to be a pro trader, this is something you need to know. And so what macro means, that in layman's terms just means the bigger picture of something. While what the micro means is that when you go further down, when you look into the little detail, all right, or the smaller picture, so to say. All right, so for pro traders, there are certain time frames that gives you that macro view of any token. And there are those time frames that gives you the micro view of that token. So the time frames that gives you a macro view of a token, for example, I'm on the BTC chart. I'm on a 4-hour. If I move to a month, this is a month right here. A month time frame of BTC gives me a macro view of BTC markets as we speak currently. And you can see that from here, it gives you an idea of when BTC started trading up until now, which is today. Now, another thing I want you to know I know I've talked about it in the past, but for someone that might just not know and hear, each of these candles represents whatever time frame you choose here. So while I'm here on the monthly time frame, each of these candles represents 1 month. Either big or small, it doesn't matter the shape of the candle. It represents, each one of them represents a month. All right, so back to what I was saying. This gives me a macro view of BTC market. And I have published several charts where I said, as far as the macro market is concerned, BTC is bullish. All right? I say BTC is not bearish. And some people will say, what are you talking about? With what is happening right now, with what is going on in the market, how can you people say that? You know, that kind of stuff. And you know how I know? It's simple. I apply the technicals or the technicality of a pro trader. I apply the skills of a pro trader. And what is that? There is something we call higher low, higher high. That didn't write well. Higher high. That didn't write well as well. Lower low and lower. Come on. And lower high. All right. My lower low is not looking pretty. Let me delete that and do it again. I'm a kind of a perfectionist. Apologies. All right, I think this is better. All right, so there is something we call lower low, lower high, higher low. I will explain them in the next class anyways, okay? I'm sort of getting tired already, so it's going to be a lengthy discussion if I start going into it right now. Okay, so for me, what I am seeing here is that on this day, 1st of June, 2021, BTC touched $28,000. $28,000. Now, looking at the macro view of the entire market, and then I move to the latest data. And what I am seeing today, as far as the macro view is concerned, was that today's price has not gone below $28,000. As a matter of fact, the last time we had a downtrend here, this was where the price stopped. This was the last price level. And if I look at that closely, that was at $32,000. All right. So what that tells me is that here I have, of course, this is I have a higher low here, and I have another higher low here at this level. Higher low, higher low, higher high, higher high. All right. This was the previous low. This is a higher low, and this is another higher low. This was the previous low. This is a new higher low. This was the previous high, or this was a high before. After this high, this is another higher high. After this other higher high, there was another higher high here at 68,000. And so, based on this, I am confident, or I was confident, as at the day I made that, I published that technical analysis, I was confident that BTC is bullish. All right. What you are just experiencing is what you might call correction, market correction. All right. Whereby when something drives up, okay, it has to come down. It has to come back down before it bounces again, more like a spring. It has to come back down. Just gravity, anyways. The law of gravity affects everything. It also affects the price of tokens. So you can't do away with gravity, really. So whatever goes up must come down, and whatever comes down will still go up as well. So that's another thing you should know. There is no token that goes up forever. It's gonna come down. It might take some time, but it will still come back down. It's gravity. It is always there. And so what is happening is just correction. So as far as I'm concerned, with what I'm looking at in terms of macro markets of BTC, BTC is still bullish. All right. So if I now want to look at the micro view, then I can go into smaller time frames. For example, I can go into 12 hours. I can go into 4 hours. I can go into 3 hours. All right, whatever the case is. And what that does is it gives me a more closer look, or a deeper, a more in-depth look of the little details in that bigger picture. You understand? So that's about it. So I didn't publish this. I only tweeted this chart a few days ago. And what I said was that nothing has changed since this day. Since this day, up till today, nothing has really changed for BTC. BTC has been going round in this circle or in this range. Nothing has changed. And so what I said was that for me, what I will do for the next 2 weeks, possibly, is to watch this space. I will be watching this space for the next 2 weeks until when BTC decides either to get out of this channel up or to get out of this channel down, whatever the case is. All right. So for me now, for example, this is an example of the micro view. You understand? So in case you come across these terms or you've heard them before, this is basically what it means. And another thing that we also consider when we talk about macro view or macro economy of cryptocurrency is that nothing exists in isolation. Even in the human world today, no country exists in isolation. There is this interrelationship. So the same way, cryptocurrency market has this interrelationship with stock markets, with every other financial market. And so that also forms part of the macro economy, all right, as far as you as a trader is concerned. And these are things you need to know. All right, guys. I think that's all for today. If you have questions, you can speak.
Hello.
Yes, please.
Okay, so thank you so much for this, and I've been looking for this opportunity. In fact, I have a serious need to understand this so well. And the reason why I said I have a serious is that I've invested so much on perpetual contract, and it has not yielded based on the signals that I've been following, based on my own analysis. And this has been an added advantage. So, however, I just want to ask some little questions. That
Okay.
what will you advise a beginner? actually I'm trading on OKX. I'm using OKX. But now that you have introduced Bybit with opportunity, I mean with open to get a that you said maybe $100 also, hey, maybe that I can now move what I have in my OKX to that Bybit, hopefully. But my
Okay.
question is that, okay, as a beginner, what would you advise a beginner to do? That okay, do I always rely, apart from the signal that I always rely on, one, then secondly, the support and the resistance that I always watch out for, or what could be, is it that the candle that I need to be, focusing on so as to probably get back what I've lost, or what will you advise a beginner that have a little knowledge about it and how to go about it per day? Is it to go on a day trading or a sprint trading so that I can recover back, or try to start understanding it bit by bit? So let me just stop at that. And then is it also possible to predict, or when it will rise, when there will be a rise and fall, or what is the best way to analyze when, like you said, when there's a particular rising, and I know that I've studied the candle, and I know that okay, at this point I need to probably long it or short it. So when it is the right time to take the right step. Thank you so much. Let me stop there.
All right. No problem. Okay, so first thing is, I usually tell people that when you are trying to trade with your hard-earned money, I think the first thing you should do is try and acquire knowledge. I know that a lot of us, the way we get introduced into trading is always not the way we would have expected. I also got introduced into trading by following signals first. And some of those signals worked well, many of them didn't work well. And so I got to a point that I was like, no, I think I need to get to the root of this thing myself. I mean, like, these guys don't have two heads. How do they do it? And I started that journey. I began to learn, So now it is important that you acquire the knowledge, which I think you are doing right now, and that is a good step in the right direction. Now, talking about how to recover. Anytime, so it happens to everyone. Anytime you lose money in trading perpetual contracts, the fast way to recover is to go to arbitrage. All right? You leave perpetual contract trading for some time and go into arbitrage. So arbitrage is, you still do the same analysis, all right? But what you do is, rather than trade perpetual contracts, you trade an actual token. So that is, you buy, you wait till the signal, to the analysis that you've done, till it works out, and you take profits at the level where you want. And so that way, you'll be recovering your money, your funds, or your lost funds, little by little. All right? Now, another thing also is that if you don't if you don't have this knowledge yet, or you are not up to a level that you feel you can be able to tell on your own whether a token is going to go down or it's going to go up. All right? So what you should do is, let me show you something. But before I show you that, let me just say that the ways to know if a token of a price is going to go up or going to go down is a combination of many things. And one of those things, okay, number one is risk management. Number two is strategy, trading strategy. Number 3 is knowing, understanding, and being able to interpret the meaning behind candlesticks or candle patterns. Number 4 is knowing the indicators, the other indicators for technical analysis. So you have to know these indicators also. I usually say that no trader that banks on candlesticks or candle pattern alone to execute a trade, you are heading for trouble. Okay? You have to combine the candle patterns with 1 or 2 more indicators. All right? And if these things, all of them are pointing in the same direction, or they are looking like, yes, there's a green flag, then that gives you confidence. That gives you a decision green flag to say that this token is a good buy, or this token is a good opportunity that you can get into. All right. So in coming class, we will look at some of these indicators. Apparently, we will look at some of the tools. Some of them are here. These are a whole lot of them. You have Fibonacci, retracement, you have fib extension, you have pitchfork, fib channel, and a whole lot of them. We have fib circles. We won't be able to touch all of them, because like I said, a proper trading course, guys, takes about 6 months or more. All right, because there's a whole lot. But I can just show you a quick common ones that you can still use to do magic or perform magic and trade safely. Okay, and there is the ABCD pattern, the ABC pattern, there's the head and shoulders, there's the Elliott wave, and several of them. These are all the indicators basically. Okay, these are some of the indicators, the common ones that we usually use anyways. All right, so eventually we will get there, and some of them I've shown you. For example, trend line. Trend is also one of them. It's also one of the tools that you need to be able to, or one of the skills you need to have. You need to be able to draw trend lines. You need to be able to identify trend, either in the macro view or in the micro view. You need to be able to draw your trends. You need to be able to say, okay, this is a downtrend. Hold on, let me get this. You need to be able to say, this is a downtrend, this is a uptrend, downtrend, up, down, like that. Okay, you need to be able to draw your trends. All right, and this is sideways, like that. So being able to do that also is one of the skills that you need to have, which I think I've shown us this today, which is a good thing. All right, and a whole lot of other things as well. So being able to predict accurately the direction of a price, of a token price, requires a combination of these things. Now, I want to assume, for the past classes anyways, for those that have been part of the past classes, I want to assume they've been able to acquire risk management ideas. They've been able to acquire trade strategy ideas, even though you will still eventually come up with your own strategy by the time you become a pro trader, or by the time you are very much well grounded in these things. You will, of course, have your own, you'll come up with your own personal strategy that works for you. All right. So they've been able to do that. They've been able to see some of the common candle patterns and the meaning behind them. All right. So we can't touch everything in one day anyway, but at least we'll be moving at quite a reasonable pace, So that is that. Now, I've also mentioned how you can recover. Okay, that's just the standard way you can recover. You need to stop doing perpetual. If you still have some little money left, you need to switch over to arbitrage. All right, and so what I wanted to show you, And then, of course, I needed to go into all that talk before I do that, basically. So what I wanted to show you is, well, apparently, you sound like someone who has some residual knowledge, who is not an entire novice. So I guess you understand when I say that you need to be able to identify your support and your resistance. Okay, and I want to believe you are able to do that already. So one of the quickest way to really tell whether a token is going to go up or down is, first, you need to be able to look into the recent data. So, and that is more like you go deeper into the chart, you look into the micro view, and then you look at the recent data. What does the recent data says? So, for example, I can say my recent data, in this case, for example, starts from here, this area. This is still recent for me enough, which is fine. All right. So, in this recent data now, I should be able to tell myself what is the shape of the market. All right. After how I'm able to do that is I need to be able to know what is the current trend. Is it a downtrend? Is it an uptrend? Or is it a sideways movement? Is it sideways? And if you agree with me in this case, here right now, it is a sideways. BTC is currently in a sideways movement. All right. So after you are able to identify what the token is it in an uptrend or in a downtrend or in a sideways movement? Sideways movement is not good for you. Don't go into it. Uptrend movement is good for you. You can enter into a token that is in an uptrend. The chances that something will go wrong is very little, at least for the time when you will be able to make some of the profits available in the market and leave. All right. When the market is in a downtrend, for you who should stop doing perpetual contracts because you need to recover, that is not good for you. All right. So that is one point. I haven't been able to identify the current trend, then you know what to do. And like I have said, in a ranging market, don't enter. Or look away, look for another token. All right. That happens to be in an uptrend. All right. Then the next thing you do is, after you have identified the trend. So for example, let me pick up a coin that is currently trending. And I think that would be Lena. No, it's not Lena. Hold on a bit, please. Rune. All right, let me look at Rune. This is it right here. If I look at the recent data right here, excuse me. If I look at the recent data right here, you can see that this token is in an uptrend. Right there. It's in an uptrend. And that uptrend started on this day, 24th of February. That was when that uptrend movement started. All right. And so this, for example, this Rune token, I can see that it's in an uptrend. After the movement here, it retraced, it made a higher low, and then it continues up again. Continue up again, trending up to make another higher high. And for me, it means that Rune USDT is what? Is in an uptrend cycle, or it's in an uptrend market. And so this kind of token, I can now, the next thing that I will now do is look for a proper entry or a proper buy level or buy price. All right. How to now identify a proper buy price is the next step, which requires one or two of the indicators that I talked about. Okay, so you know that as it is right now, this token has gone up from this day here, 8th of March. It has been going up here. Where it is right now, it is unable to go up from here. It has been unable to go up from here. It has been unable to punch through this this top. It has been unable to punch through this top. Okay, hold on. It has been unable to move beyond this level for now. So what you will do is you will now try to see that what exactly is happening there. Is it that there is a resistance here? All right, and what you do is you now track back to the old data. You look back. So what I'm doing right now is I am zooming out. Previously, I zoomed in. Now I am zooming out. Why am I zooming out? I noticed that this token has refused to, it has had 1, 2, 3, let me increase. 1, 2, 3, 4, 5, 6 bars. It has printed 6 bars so far, and it has been unable to move beyond this level. What exactly is happening here? So I will zoom out. Why am I zooming out? I want to identify a resistance at that level. Is it that there is a resistance here? Oh yes, there is a resistance here. And this is what I do. I pick out my tool and I draw the resistance level. This is it right here, in this middle right here. That's the area. So there is a resistance here, and that is why it has printed 5 bars, 5 bars, and it has been unable to move beyond that level. Okay, so what does this tell me? What this tells me as a trader is that this token right now cannot do anything. It needs to go back. It needs to come down before it will go back up and attempt to break that resistance again. And so the next thing for me to do again is I will now say that where should I put my buy price? In case when the price comes down, as it should be normally, where should I wait for it? Where should I wait in order to buy it? And what you do is you identify the nearest support. You zoom out again, you use previous data to try and identify your nearest support. All right, so once you've identified your nearest support, you confirm whether it is a strong support or not. If it's a strong support, set your buy price there on Bybit, wait for it. It will come down eventually. It doesn't matter how long it takes. It will come and hit your buy price. If it is not a strong support, identify the next strong support and also wait for it there. All right, so that's about it. It's a process of several steps, decision making, iteration really, before you arrive at that final decision. So that's it. I hope I've been able to answer your question to an extent, really. And I've just taken you through more like a daily life of a trader, honestly. Yeah. All right. So I hope that works for now.
You've done a great justice to that. And the arbitrage you advised me about. Actually, there's one I did some times ago. Now to trade. I don't know if you've heard of that.
Okay, so there is automated arbitrage bots, and there is one you can do manually. The one I'm talking about is manually on your own. Please, I don't advise people to use any of these applications or softwares or trading bots for arbitrage. I do manual. All right, yeah. So yes, please. I think
don't
it's
know.
important. I always point that out that it's manual arbitrage, even though there are applications that does automatic arbitraging for you out there. All right.
Okay, so I will read about that then. But it's good to do it on Bybit, right?
Yes, I mean the fact that for me it's just the benefits that Bybit offer so far that I've been able to identify. So I feel more comfortable trading on Bybit. If you also try it out, I think you might also feel comfortable. If me as a trader, if I'm able to find some love, the same way some other pro trader before me are able to find convenience with Bybit, I think you will also be able to do the same. So, yeah.
Oh, okay. Thank you so much for the answer. At least
All
that
right.
worked.
All right. Beautiful.
Hello.
So, any
Sorry,
other? Yeah.
sorry. I'm taking your time.
Okay, it's no problem.
The bonus,
Yeah.
how much is the least that the person can, put there
Okay, the
on
least amount of money you can put to Bybit is $10 minimum, and then you can put more than that. So the bonus is depending on how much you deposit. All right. So if you deposit $50 and above, yeah, you will get the bonus. If you deposit below $50 with my link, you're not gonna get as much bonus.
but you will get more.
If you do $50 and above, yes, you will get it.
Okay. All
Yeah.
right. Okay. Thank you so much. Okay. Bye.
All right. I will drop my link again in the group, but also it is pinned.
Okay.
So you can sign up to that link, and then you are entitled to the bonus and some other benefits as well.
All right.
All
Please,
right.
and this
So are there? Yeah. Go on. Go
video
on.
too.
Okay. Yes. I know that by the time I end this thing, it's going to be really heavy, but no problem. I will still upload it, and anyone who is fine with that, I will just drop the link in the group, and it's not a problem. All right, guys. So, any other question? The day has been fast spent. Some people I think they are tired, they've left. All right. Is there any other question, guys? In the absence of any other question, I think we can shut this down for today. And let's convene again. Let's reconvene next Sunday. It's going to be a Sunday affair. All right. So, yeah. So if there are no questions again, okay, let me just stop.